Hello, my friends. We are in the second part of our tutorial. I am Mehdi and I am going to talk about candlestick patterns and how to trade with candlestick patterns. We will describe what has happened in each candle. Also, we will talk about indicators and we will talk about the attributes that each one of these indicators has, and we will talk about how to trade with these signals and these tools and how to make money with them. We will talk about most important indicators because each indicator has lots of details. We are not able to talk about lots of indicators. So we will talk about most important ones. In the future, also, we will talk about some more indicators. In this session, we will talk about moving average, or we will talk about MACD for moving average convergence divergence, parabolic SAR, RSI indicator, Bollinger Band, CCI, stochastic, and we will talk about how to trade with these important indicators and how these indicators give us buying or selling signal when they tell us, okay, Mr. Trader, in this point you should get buy position, or when should you get sell position. At the beginning, I will highly recommend you to watch our first session if you have not seen that. It's very important. The subjects and the concepts that we have talked about in our first session are very important. I think if you wanna get a good result of this tutorial, if you wanna become a good technical analyst, you need to be aware and you need to know about almost everything that we are talking about in our tutorial. So if you haven't seen our first session, stop this video and go to our channel and start watching our first session. It makes us very happy if you like this video or subscribe our channel. Okay, my friends, let's go and talk about candlestick patterns. Are you ready? Let's start. Okay. The first candle that I want to talk about, and the first candle which has important meaning and signal I would like to talk about, is solid bar candle. This candle shows us, for example, at the end of an upward trend. Imagine we have had an upward trend, and after that you see this candle, this red candle, not this green candle. You see this red candle. This red candle at this moment shows us something has happened in the market between the traders, or some news or some economic happenings uh, made a downward expectation, made a downward trend expectation between traders. So the traders started to sell their assets or get sell position in that market, and this selling position and this action of the traders have made this red candle, which we call this red candle solid bars. Solid bars are candles that the opening price and closing price are near the highest, and the lowest price they have big body, and mostly they have short shadows. Okay, we call these candles solid bars. And these candles this candle shows us some traders have stopped the upward trend movement of the price. Okay. For example, let me explain more. A good happening, or we have had a support area here, and in this area, for example, here is a good support area, and buyers and traders started to buy from here, and they have increased the price to here. Also, after that, they increased the price here, they increased the price here, increased till here. We have arrived and we have reached a resistance zone. We have a resistance line here. After that, when we reach to a resistance area, or if some bad news when some bad happening occurs, at this area, traders start to sell their assets, and after that they decrease the price to here. And we also have some shadows here. For example, price opens from here, starts an upward movement. After that, it starts a downward movement until here. And after that, it starts another upward movement until here, and it closes at this point, this area. This shows us after the control, after the time that buyers have controlled the market and traders believe that the prices will increase and increase and increase and increase. Here, most of the traders believe that the prices will have a downward trend in the future. So they have started to sell their assets, and they've decreased the price until here. Okay, so we can understand that this candle shows us the sellers they have started to control the market. Okay, and this candle can be a signal that shows us the market is beginning a downward trend, and after that we may have a downward trend until here. Okay, if this resistance zone was a more powerful resistance zone, this candle is a more trustable candle. Okay, and if we didn't have any zone, you'd better not to trust to this downward signal, and don't pay attention to it. This is a consolidation. This is a swing in the market. This is a short-term swing in the market only. The other candle, so this solid bar is a bearish signal. It shows us bears have started to control the market. The other signal that you can see is the bullish solid bar. This is a bullish candlestick pattern, bullish solid bar, and the bullish signal. I don't know what do you like to call this. It's just like the previous candle, and it happens after a downward trend. When we have a downward trend until here, and also we have a support line here. This candle shows us in this area, in this downward trend that has happened before this candle, sellers were controlling the market. But at this point, at this candle, buyers started to control the market. They have pushed price up until here. So we can say buyers stopped the sellers at this point, and this is a good signal. This is a good sign that shows us after this downward trend we will have an upward trend here. Okay, and if here we have had a good support line, we have had a powerful support line, we have told you about how to evaluate the power of a support line. If here was a good support line, you can you can get buying position and take profit from this movement, this upward trend. Okay, and this is this was some descriptions about bullish solid bar. Let's see an example of bullish solid bar. You can see we have a support line here. Okay, we have a support zone here, and in this support zone we have a solid bar. Okay, also this signal is like engulfing signal that we will talk about engulfing signal in the future slides in this session. Uh, Around a support zone, we have a solid bar signal. And after that, we have a candle that can you see this green candle? Let me check. Uh, this green candle, okay, shows us the price will is going to have an upward trend because this candle, this green candle, I cannot use. This green candle is a bullish candle, and also it has an open here and closed at the higher. It has closed higher than this candle. This candle uh, confirms our bullish signal. Okay, we have confirmation signal with that green candle. So it shows us the price is going to have an upward trend. Okay. After that, you can see this upward trend, this powerful upward trend has been started. Okay. Uh, this is this was some descriptions about solid bar candle. I think you'd better to write a summary of these candles shapes and uh, their details and the information that you can get from these candles. We will talk about how to trade with these candles in the future. The other candlestick pattern you can see in the charts is called doji candles or doji bars. Uh, doji bars or doji candles uh, almost have no body, or they have a very small body, and it's not important that their body is red or blue or green, I mean. And it shows us, dojis mostly show us the conflict between bulls or buyers and sellers or bears have been started at that point. Okay, these signals are more important when we have a support zone or resistance zone. Okay. Uh, the other thing that you need to pay attention is the shape of these candles. You can see this long shadow shows us something has been rejected. And also, some traders have an expression that say this shadow shows the depth of the water. They mean here is sorry. Here is the highest price that buyers can push the price up until here. It's very hard for them to increase the price more than this area, for example, come to here. Okay, and also this candle sometimes say it shows the depth of the water. Uh, Okay, this was some short summary about this candle. Let's see what is the information inside this candle. Okay, uh, we have we have had an upward trend. For example, we have had an upward trend. At this point, the buyers couldn't increase the price higher than this, and at this point sellers, or at this area, sellers started to push the price down. Okay, and this rejection of the buyers, and this rejection of the upward trend of price movement shows that a conflict or a downward trend may start. This candle is a little powerful candle. Okay, this candle is also has also bullish signal. These candles are bearish and bullish. It's not different. Uh, After a downward trend, the buyers, the sellers, couldn't push the price lower than this price, lower than here. And buyers started to buy. They have stopped the sellers. They have started an upward movement in this area. And after that, the sellers started to sell more, and they have started to control the market. So at this point, sellers started to sell their assets, and after that, they have pushed price down. Okay, this doji signal is bullish and bearish. Okay, you cannot say that this signal is only bearish, or this signal is only a bullish signal. Okay. Another thing you need to know is I think it's good for you to know the name of these signals. This signal is called gravestone. It's something like gravestones. And this is the information that this was information that you need to know about the first candlestick signal, first doji, gravestone doji. It is called gravestone doji. The other signal that is like gravestone doji is dragonfly doji. Let's talk about this doji because of because it looks like gravestone, and it's easier for you to analyze this candle. This candle also is a bullish and bearish candle. It gives us a bullish signal and bearish signal. And when it occurs in the bottom of a downward trend, for example, we have a downward trend here, price decreases, 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 And in this candle, price opens at this point. After that, the downward trend and the downward expectation of the price in the sellers pushes the price down, pushes down, down, down until here. After that, buyers find out this price is very low for this asset. They will try to buy, they start to buy this candle, and they will try to increase the price. After that, they increase the price, increase, 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 and at this point, candle will be closed. Okay, and it shows us the buyers have started, have stopped the downward expectation, the downward trend between the sellers of the market. Okay, and it tells us in the future we may have an upward trend, and price may increase and increase and increase after this candle. Okay, it shows buyers have stopped the sellers. It's important information that you can get from this candle. Okay, and this is I've told you this candle is called dragonfly doji, and it is powerful signal. The other signal that you can get from the market, from the candles of the charts, is doji bar. Long leg doji. This is long leg doji. This one. Long leg dojis. They have also an opening price and closing price, and the open and close price are at the same price. Also, the color of this doji is not important. It may be green, it may be red, or in some platforms it is white or black. Its color is not important. The important thing that you need to know is that when this doji happens around a support or a resistance area, or when we have some news in the market, I mean some important news. We have some news that they are not a lot valuable to trade according to them. Some valuable and important news. When it happens after that news and that happening, for example, it shows us the sellers tried to sell this asset, and the price has opened here. We can have a downward or upward trend here. This is not very important. And we are around a support or resistance line, or some important news has became out. The price opens from here and decreases, and after that buyers start to buy and they increase the price. After that, some sellers start to get sell position and they decrease the price until here. And this candle also shows us a conflict between buyers and sellers has been started. Okay, and it's important for you to find out the meaning of this signal. Uh, okay, we have talked about these three candles. Uh, you need to know that all of these candles can be bullish candles, bullish signals, or signal that tells us the prices is going to start another trend. For example, if we have had a downward trend, in the future we have upward trend, or if we have a or if we have had a upward trend, we are going to have a downward trend in the future. Also, this signal, I've in my example, in this signal, I told you if we had a downward trend, it's a bullish signal and a bearish signal. I mean, if we had a downward trend, this dragonfly doji tells us we may have an upward trend. And also, if we have an upward trend, this signal tells us we may have a downward trend here. Okay, it has the meaning of these signals is according to the supports and resistance and their previous trend. Where are they and their previous trend? We will show you some examples in the futures and also in the charts. Another doji that has its own meaning that is different from its last dojis is the fourth doji. This doji opens from here. Sorry. The price opens from here. The price doesn't have an upward or downward trend and also closes from here. The color of the doji is not important also in this doji. Okay, it's not important it is red or it is green doji. And this doji shows us uncertainty of the market. The trader, when you see this doji, we have no power. The buyers have no power, or they will not try to increase the price, and also the sellers have not enough power to decrease the price. They mostly, when this candle happens, in most of the cases, traders are waiting for an important news, and they're waiting to see what has happened, what is going on. Okay, they don't know. It's better for them to buy They don't know it's better for them to sell. And uh, this un, un, unclearness and uncertainty of the market is the reason that they are waiting. Mostly they are waiting for some news. They wanna know what's going on and what will be happened after that news. Okay. For example, negotiation news. They may wait for a negotiation news, or they may wait for some statistical news, or I don't know, war news, or anything else. Some items that have uh, economic effect. They are waiting for that news. Here you can see an example of a doji candle. This is here. I mean, this is a long leg doji candle, and it shows us the traders at this point have a conflict. Buyers try to start and try to push the price up, and sellers are trying to sell their assets, and this at this candle we can see we have a conflict between buyers and sellers. We have also a support line here. Here is a support line. The candlestick pattern has happened around the support line, and it gives us a buying signal. Okay, so we will get a buy position on this signal, and you can see the price has started an upward trend here. Okay, this is the important thing you need to pay attention is to in situations like this, when you wanna get position, is to pay attention to get position in the direction of the price chart and price movement. For example, here in this chart we have an upward trend, a clear upward trend we have. Before that we have had another upward trend that has its speed and its intensity has increased at this point. Okay, well, so we have a support line here, and we also have an upward trend. At this point, when we see this signal, we will get a buy position, and after that we will take this profit. For example, in this area, if we have had this signal, if you have seen this signal, this long leg doji, at this point, what did you do? Did you get sell position or not? Think about it. Uh, you'd better not to get sell position at this area, okay? Because we have an upward trend here, and this signal is a risky signal, okay? I've told you, you'd better to trade in the direction of the trend, okay? Uh, in this trend, you'd better not to get sell position, even if you have had a good signal around a good resistance zone. Okay, you'd better only get buy position in upward trend. Only in a downward trend you are allowed to uh, get a sell position. Only in downward trend. Okay. Uh, I will repeat these important information for you to uh, uh, to better knowledge and better trading skills. Okay, these are important information. I mostly see lots of traders lose money because they don't pay attention to these information. Uh, the other candlestick pattern is spinning top and spinning bottom. These patterns have a meaning that these patterns shows us indecision in the market. The traders don't know what is going to happen, and this and they will stop to get sell position and buy position, and this causes the prices uh, stop the movement. The prices on these candles do not have a big upward movement, or they don't have a big downward movement. Some of the traders say these spinning top and spinning bottom candles are candles that have no bullish or bearish power. They say these are not bullish signals and bearish signals. It's sometimes true. When you see these candles, uh, bit, uh, these candles that in the areas that are not around or on a support zone or resistance zone. Okay. In these situations, for example, in the middle of a trend, in the middle of a upward movement or a downward movement, these signals show, for example, when we have a support line here and we have a resistance line here. So this candle is just between this support and resistance line, and we have an upward movement. Okay, we have upward movement, support line is here, a resistance line is here. Okay, this candle shows us the buyers have power, but uh, they don't know. They are not sure that the price will touch the resistance zone. They have not they have not high power to increase the price. Okay, if this candle has happened uh, around a support zone or resistance zone, uh, this shows us, for example, when we have a downward trend here. Okay, we have a downward trend here. We have a support line here. Okay, and after that you see this candle. Okay, this shows us buyers started to control the market, or sellers uh, in this uh, downward trend, the sellers that have decreased the price until here, the prices until here. At this point, at this area, have no have no enough power to decrease the price. They mostly believe that here is the lowest price. Okay, uh, or buyers started to buy and they have started to stop the downward trend. Okay, so this candle, when happens around a support line or resistance line, or when it happens around a support zone or resistance zone, the color is not very important. The thing that is important is that the buyers or the sellers, for example, in my example, the sellers have no their previous power to decrease the price. Uh, they have they're not sure that they can decrease price lower than this. Okay, and the buyers started to buy and they have stopped the price in this zone, and it's the probability of starting a new upward trend is high when you see this candle around a support or resistance line. Okay, I've told you the color of this candle is not very important. Okay, these two candles in these two candles the color is not very important. Uh, the thing that is more important is to pay attention to this key point, that with this candle, traders don't know are not don't know about the buyers have stopped the decreasing price, and in some cases the traders are not sure about the future. Okay, um, in some candles, when it happens, for example, in middle of a price channel, it shows us the traders are not they don't clearly know about the future. And this was some uh, informations about spinning bars. Let's see an example about this signal. Here in this support zone, around this support zone, you can see a spinning bar has been shown. Before this candle, you can also see dragonfly doji. Okay, this spinning bar in this zone shows us the after a downward trend, a micro downward trend or a minor downward trend. After a minor downward trend, this spinning bar shows us indecision of the traders. They don't know the prices are going to decrease or they will start an upward trend. And after that, we have a confirmation signal. Okay, in these spinning bars, spinning candles, we need to have confirmation candle. We need to after this candle, we need a bullish candle, a green candle, which closes upper than the highest price, the upper than the close price of its previous candle. After that, we have a confirmation signal, and we are around a support zone. After that, we can see an upward trend has started. Okay, and this shows us the how this candles work, how the spinning candle works, and that's it. Let me check if we had another signal. Now we have a gravestone candle. Can you find it? We have a gravestone here. Okay, we have a gravestone doji. Here we have a doji, and it has shown us that at this area we are almost near a resistance zone. Okay, this gravestone shows that the prices is going to have a downward trend. So you can see the prices after that have been decreased until the support line. Okay. Okay. I think we don't have any more signal. In another signal is here. Another doji signal. Okay, but it is not very important, I think, because it's not around support or resistance line. The thing you need to know, the key point you need to pay attention is that in this situation, when you can see this gravestone candle or gravestone doji signal, you'd better not to get sell position. Why? Think about this for 10 seconds. You'd better not to. What is the answer? You'd better not to get sell position because uh, we have an upward trend. The trend is upward. Okay. So when you get sell position, it's very risky. The risk of the loss of money is very high. So you'd better not to get sell position when you see this doji. You can sell your assets in this point, but you'd better not to trade in opposite direction of the trend. The trend direction is upward. Okay, you shouldn't say you shouldn't get a sell position in an upward trend. You only should get sell position in a downward trend. Now let's talk about next candlestick pattern. Uh, uh, the next candle that I'm going to talk about is hanging man candlestick pattern. Uh, in these candles, I think uh, these candles a little look like a hanging man person. Um, and also these candles have short bodies, and they have long down shadows. They have long shadows in the bottom, and the length of this shadow, it's better to be twice of this body. This causes to increase the power of this the increase the um, uh, verification. I mean the power. Yeah, the power of this signal. Uh, when this in most time when the shadows are twice the bodies, uh, there are more valid signals. You know, they in most cases they will come. They will give valid signals to us. Uh, these candles occur in the beginning of an upward trend, and they are bullish signals, and mm, and the shadow of these candles, uh, I've described about you, shows us the depth of the water, the lowest price that sellers can push a price down. Um, it's better to have a little gap here after a downward trend, and a little gap here. Okay, but it's not necessary. It's better to have this candle, this gap, and also if the length of the shadow was twice of the uh, length of the candle's body, uh, it's better. It is not. It's not a must. It's not a. Um, it's not compulsion. Okay. It's better. The length of the shadow become more and become more than twice of the length of the body. Uh, and this is the example of the this candle. Let's talk about what has happened in this candle in the market. For example, we have had a downward trend here. Okay, after that downward trend, around a support zone, around a support area, you can see this candle has happened. Okay, this you can see this candle, and this candle, I've told you, the shadows in the bottom of the candle shows that the prices are starting an upward movement. Okay, this candle occurs around a support zone. Okay, this shows us the sellers uh, started to sell their asset, and they've sold until here. Okay, and they have decreased the price to here. After that, buyers started to buy, and they have increased the price until here. Okay, and it shows us the buyers have began an upward trend. The buyers are going to control the future of the trend. The buyers are going to increase the price of that asset. Okay, it is this is what has happened in this candle. So when you see this candle in your price chart, uh, you can realize and you can understand that the prices uh, will have an upward trend. We will we can you can understand that we may have an upward trend in the future. Okay, the probability of an upward trend uh, it is higher than before. Okay, it's a lot higher than before. Uh, you can see here we have a support line. Here we have a support line. We have an upward trend, downward trend, upward, downward, upward, downward to here. Okay. Around the support line, we can see the traders uh, decreased the price until here. They have decreased the price, and they have made this shadow. Okay, and after that, the price started an upward trend. Sorry, the sellers has sold their assets, and they decreased the prices until here. After that, at the opening of this candle, uh, sorry, at the opening of this candle, uh, and here. After that, they have decreased the price to here. But at this point, the buyers started to buy this asset and increase the price until here. And after that, the prices start an upward movement, and the prices increase and increase until here. Okay, you can see how this candle works around a support line. Okay, and this was some points, some discussion, something important things that you need to know about hanging man candlestick pattern. Let's talk about the next candlestick pattern. I think this is shooting star. After that, I think we will talk about piercing pattern. Shooting star is opposite situation of hanging man. Also, in this candle, length of the shadow of the candle here, this length of this shadow should be twice of the length of the body of this candle. And this is also a this is a bearish signal, okay, and it occurs after an upward trend. When we have an upward trend, prices increase until here. After that, the buyers increase the price until here, and after that, sellers find out this price is very high for this asset, so they start to sell this asset and decrease the price. From this point, that shows us the depth of the water, the depth of the highest price that buyers can increase the price until here. At this point, sellers start to sell their asset. They sell more, and they decrease the price to here. Okay, and from this point, we can find out this candle shows us the sellers started to control the market. Okay, and after that, we may see the prices is decreasing. After that, it's decrease, and decrease. Okay, and this was almost everything that you need to know about shooting star candlestick pattern. It's better when the color of shooting star pattern is red. Also, in hammer or hanging man pattern, it was better when the color of this candle was green. Why? It's better if this color become green? Because we have a downward trend here. When this color is green, we can understand on this candle the price was upward and the price has increased. So it's the probability of future increasing of the price is more. Also, in this situation, if uh, the color of this candle was red, it's more probable to have a downward trend after this candlestick pattern. So the color is important. The length of the shadow in these signals are important, but they are not very important. Okay, you know what I mean. We have a shooting star example in this slide. You can see we have an upward trend, and prices increase and increase. At this point, you can see a shooting star pattern is shown. So we can find out in the future the price is going to have a downward trend, and the prices is going to decrease. So the prices has decreased until here, but it's very important to pay attention to this key point, that you should not get sell position in an upward trend. You can also see here we have another shooting star candlestick signal, and you'd better not to get sell position. I've shown this example for you to see when is better to get buy position and when it is not good to get buy position or sell position. And this was an example of a shooting star candlestick pattern. Let's talk about piercing candlestick patterns. Let me check something. Okay. We have bullish and also bearish candlestick pattern. The bullish candlestick pattern, which is the left, these two candles are called bullish candlestick piercing pattern. Okay. When we have a downward trend here, and you see these two candles at the end of a downward trend, it shows us an upward trend is beginning. Okay, we have a downward trend, and this candle shows us a powerful downward movement and decreasing movement in the price. Okay. After that, we have a gap here. We have a gap here, and the price closes here, and after that opens at this point. So we call this distance We call these in technical analysis, we call these gaps. Uh, and gaps mostly shows us the power of bullish and bearish movement. In this example, this gap shows us we have a bullish power. Okay, the prices are going to decrease. The sellers, the sellers are controlling the market and they're decreasing the prices. Okay, this gap shows us uh, we have a bears are sellers are controlling the market and they are decreasing the prices until here. Okay, uh, they have decreased prices until here, and after that, in this area, especially when we are around a powerful support line, or when we are around a support line, buyers start. We have also a down price opens from here, and it has a little downward movement. Okay, and price open. This candle opens from here. The prices have a downward movement until here. Okay. After this downward movement, buyers find out here is a good point to start buying this asset. And after that, they will increase the price, increase until here. And after that, some sellers sell their asset and decrease the price, and price closes from here at this point. So we have had a downward movement. This solid candle, this first candle, have had a bearish power. We have talked about is this candle in solid bar candles, in the part of solid bar candles. We have a bearish candle. We have a bearish gap that sellers have made. After that, the price had an upward trend, and it has filled previous candle 50% of its previous candle. So it shows us the buyers are controlling the market. The buyers started to buy, and they may start they will start an upward trend. Okay, the technical analysis tells us it starts an upward trend if we had a good support line here. Okay, the probability of starting a powerful upward trend in this area is high. Okay, we have some same thing here. We have a upward trend. Sorry. In the bearish candlestick piercing pattern, which in some cases it is called dark cloud. Uh, we have the prices increase and increase and increase. We have a powerful candle here which shows us the prices will have an upward trend. Will have an upward movement. Also, we have a gap here that shows us the prices. The bulls and the buyers are controlling the market, and they are increasing the prices up higher and higher and higher. At this level, at this price level, the sellers start to sell their assets, and they will decrease the price until here. Okay, the buyers buy more and more, and after that, in this candle, the buyers from this point buy and increase the price, and after that, the sellers find out this point is good point to sell their asset, and it's good point to start selling or get sell position. They start to sell their assets or get sell position and decrease the price, decrease to here. And after that, buyers increase the price to close point and close line. So this candle shows us sellers are the sellers have with a big power have stopped the buyers. The sellers have stopped the upward trend movement. Okay, this is what is important in this candlestick pattern. Let's see an example of this candle. Okay, we have the chart that I have captured this image from that. In that chart, the trend was upward trend. Okay, and I have captured this image from that chart, and you can see a piercing pattern has happened. Okay, we have an upward movement. It has no shadows. Shadows are not very important in piercing patterns. We have an upward candle, a bullish candle, and we have another bearish candle that rejects our price. Okay, that decreases the price, and at this level, the prices start a downward movement and decrease to here. Okay, and this shows us the sellers have started a downward movement. The sellers have started to decrease the prices. Okay, and this was the example of piercing patterns. I don't remember to tell about any key points that should be told. Another powerful candlestick pattern is engulfing pattern. I think the engulfing patterns are the most powerful patterns that you can see in the charts. They should have two attributes. Okay, the opening price. When we have a bullish engulfing, this is a bullish engulfing. It happens at the around the support line before a upward trend. We have a downward trend here, and you can see in this candle when we have short body in this candle we have short body, and it shows us the power of the sellers is very low. They don't have they do not control them they don't have control of the market. Okay, they can't decrease price lower than this. For example, when we are around a support zone, this candle shows us the sellers lost their power. They're not able to decrease the market, decrease the prices anymore. And this engulfing pattern shows us let's see what has happened. We have a downward trend here. After that we have this candle that has a short body. After that we have a gap here, and it shows the prices. It shows the sellers are decreasing the price, and after that buyers or some sellers decrease the price until this lower shadow, the shadow at the bottom of this candle, and at this point or this around this areas, around this zone, buyers start to buy this asset, and they increase the price. They increase the price, increase until here. And this body of this candle, we have an expression that tells this candle has engulfed this candle. I mean, the opening of this candle is lower than the close of its previous candle, and also the close of the second candle is higher than the opening of its previous candle. So this candle shows us a powerful bullish signal, and a powerful movement of the prices have been made by buyers. It shows us buyers are have the power of the market, have the control of the market, and this is I think this is the most powerful candlestick signal that you can see. And after this candlestick pattern, you can see prices start an upward trend. Okay, uh, this candlestick pattern doesn't need any confirmation signal. It has enough power to increase the price if it was around a support area and support zone. The other type of engulfing is in other type of engulfing pattern is bearish engulfing pattern. This engulfing pattern, the bearish engulfing pattern, I mean, happens when the prices are going to have a downward movement and downward trend. Okay. For example, we have an upward trend here. We have an upward trend here. You see this candle at the end of the that upward trend. And after that, you can see prices open from here, have an upward movement, closes from here. We have a gap here. It's very important to have a gap at this area and this area in this candlestick pattern. Okay, we have a gap here and prices open from here, and the price also increases to up, and after that sellers find out this asset is very expensive. It's best time to get sell position or sell their assets. The sellers start to sell their asset, and after that they decrease the price, decrease to here. At this point, some buyers start to buy and increase the price to here. So you can see this candle has engulfed its previous candle. Okay, and it is a powerful bearish signal, and it decreases the price in the future if it was around a resistance, a good resistance zone, and you can take profit from this signal. Let's see an example of these engulfing signals. You can see we have a support zone and support area here. I have drawn this support line. We have an engulfing signal here, and after this engulfing signal, you can see prices have an upward movement and an upward trend until here. At this point, we have a long-lived doji, which shows us the conflict of the buyers and sellers, and you can see it has decreased the price. It has started a downward trend and decreased the price up to here. Can you see any more candlestick signals for me? I will wait for 20 seconds. You should find the other candlestick signals that you see. Okay, my friends, we have some other candlestick signals. Uh, this one is one of them. Is it is at the top of the uh, chart. It's spinning bar, or it also looks like doji. And we have an engulfing bar here, an engulfing candlestick pattern. We have a doji here, a long leg doji is here. We have a hanging man or hammer here. We have another engulfing pattern here. We have here spinning, or I don't know, long leg pattern. We have engulfing. This is engulfing pattern here. Yes, this is engulfing pattern, and pay attention to this key point that uh, it's very important for us to see candlestick patterns that to when uh, it's very important for candlestick patterns to be around support or resistance zones and areas. Uh, Supports and resistance areas increase the valuability of a candlestick pattern. It's very important to pay attention to this key point. Let's see other candlestick patterns. Uh, we have morning star. Morning star candlestick pattern. It's something like engulfing pattern. That we have a spinning candle around between those two engulfing patterns, or something like piercing pattern that we have talked about before in the past. I mean, we have it, for example, we have a in these candles we have a bullish candle, sorry, a bearish candle. We have a downward trend in this candle. We have spinning candle, which is called in some cases they call this candle star candle, and we have a bullish candle. Our bearish candle, for example, imagine that we have a downward trend here. We have a downward trend here. We have, at the end of this downward trend, around a support zone, we have this candle. The opening price is from here, and because the sellers are controlling the market, the price decreases to here. Okay, and this this session closes at this point. Because of the downward expectation of the sellers and the traders, we have a gap here between closing price of this candle and opening price of this candle. We have a gap here. Okay, the color of this star candle is not important. I mean, the gap can be in this zone and area. Okay, we may have this gap, and after that we have a gap in this area between close of this candle. Sorry, in this area. In this area, we have another gap between close price of this candle and opening price of this candle. And after that, we will have an upward movement and price start an increasing movement and increases until here, and after that decreases to here. And this V-type movement, okay, V-shaped movement, shows us the buyers have stopped the downward movement, and also they have started an upward movement. Okay, the buyers are this means that in the future, in the nearly future, buyers are going to control the market. Okay, the buyers are beginning an upward trend. Okay, so after this downward trend that we have in this area, this signal shows us we are going to have an upward movement here. Okay, and it shows us the buyers are the controllers of the market. The other candle, the evening star candlestick pattern, or the evening star candlestick pattern has same situation, but it's a bearish, it's a bearish signal. We have an upward trend here, and also we have an upward expectation, a bullish expectation, and buyers think the price is going higher and higher and higher. The prices are increase and increase and increase. After that, after this session has closes, we have a gap here, and prices after this candle have a gap here, opens in this candle from here, and after that we have an upward pricing movement until here. After that, in this area, in this zone, sellers come to the market and they start to get sell position at this point. We have some increasing and decreasing movements within these shadows, but at this point we have sellers make this gap, and it shows us the sellers are controlling the market. The sellers have started to make a downward movement, a downward trend movement, and the next candle opens from here, increases the price to here because of the upward expectation of the traders, and after that the price decreases to here. Also some buyers start to buy and increase the price to here. Okay, and at this point we can see we have uh, uh, an, an upward trend. Here we have an upward powerful trend here, and after that we have had a downward powerful movement and trend in this area, and it shows us the sellers are the sellers have started to control the market, and the sellers are decreasing the prices. Okay, and this is a good bearish signal. I in some references, in most references, I mean, wrote that this signal, morning star or evening star, do not need a confirmation signal. But it's better for this signal to have confirmation signal. You can see this signal in price chart. We have a downward trend here. The trend is downward. We have a downward trend here. We have a micro movement, micro channel price movement here. We have a downward movement here, and at this point you can see a powerful bearish signal, a powerful solid bar has happened. After that you can see a star bar, star candle, and after that we have a gap here, and this gap shows us the power of the upward movement that you can see in this area. Okay, but you'd better not to get buy position in a downward trend. When the trend is downward, you'd better not to get buy position here. You can see we have another candlestick pattern is here, engulfing pattern, which you can see couldn't increase the prices a lot. Okay, this is the reason I tell you that trade in the direction of the trend. Trend is your friend. Okay, I will give you about 10 seconds or 15 seconds. I will stop talking, and I will let you to find other candlestick signals. It's a practice for you. Okay, I have a practice for you. Find other candlestick signals in 15 seconds. Okay, my friends, let's find candlestick signals together. We have a shooting star here. We also have a hanging man here. Uh, we have a piercing pattern here. We have talked about it, and we have another piercing here, but it is not around support or resistance zone. We have long leg doji here. We have a dragonfly here, um, and these are some. We have another doji here. That's it. We have another doji here. This is greatest stone doji, or it also looks like shooting the star pattern. That's it. Let's go to the next slide. Haramis. Harami also like spinning bars uh, are candlestick patterns that can be bullish, bearish, and also they can be not bullish, not bearish. They can have no meaning. It's very important when you see where you see in the price channel, where you see harami candlestick pattern. When you see this one, the left one, harami, is a bullish harami, and it's it is a bullish signal, buying signal, and this one is a selling signal. When this candlestick pattern happens in the middle of a channel, in the middle of the price channel, it shows us the indecision in the market between traders. But when it occurs around, for example, when this bullish harami occurs around support line, it shows us we are going to it is a type of bullish signal. It is a type of, it tells us an upward trend is going to start. An upward trend is beginning. Okay. Let's see why this, for example, this bullish harami is important to occur around support line. We have a downward trend before this candle. The major trend, imagine we have an upward major trend. We have a downward trend movement, downward minor movement, and after that we have a gap here. This gap is a bullish gap. This tells us buyers are a little powerful. The buyers started to buy and increase the prices. The color of the second candle is not important. In some cases, traders call this candle baby candle. The color of the baby candle is not important, but in this example, price in this candlestick signal, price starts an upward movement. Okay, and this gap and this price movement shows us the buyers started to control the market. But other thing you need to pay attention to is that buyers here, you can see the body of this candle is very small. So the buyers are not powerful. For example, in piercing patterns, in this pattern, buyers after a downward trend, buyers were very powerful. Okay, but in a Harami pattern, buyers are not very powerful. Okay, and this shows us we need to wait a little to get confirmation candle. We need to get another candle that closes in the at the close upper than the close price of this candle. For example, closes from here in this area. Okay, this candle needs confirmation, and it needs to be around support zones. The other candlestick pattern, the other type of Harami candlestick pattern is bearish Harami candlestick pattern, which shows us the upward trend is around its end. We are going to see a downward trend. Okay, it mostly happens around a resistance zone and resistance line, and price. You can see this candle is a bullish candle. The price opens from here and closes here, and this shows us the buyers are controlling the market. So, and after that, we have a gap here. This gap shows us the sellers are and also shadows that are in the upside of the candles show that the buyers are the sellers are have started a downward movement. Also, this gap shows us the bearish power of the traders. This candle, the color of this candle is also not important, but in this candle shows us the bears of the market are more powerful, and they have more power to control the price of the future. And this candle, if we have had a confirmation candle, a candle which closes at the lower than the close of this candle. When we have had a confirmation candle, we will in the future we will see a downward movement, a downward price movement. You can see this Harami candlestick pattern. It occurred around the resistance line, and it has decreased the price in this trend. I will give you about 10 seconds to find other candlestick patterns that are around support and resistance lines. Find them. Okay, so this is a doji around this resistance area. We have also this harami around the resistance area. For example, I think you couldn't draw this the support line. So these two candles, these two signals are not valid for us. We cannot. We have hadn't any support line to find. This is around support line, and also this is around support line, but this hanging man or this hammer pattern is around the line, the support line that you could draw in this area. Okay, and this is I think another candlestick pattern that you could find out. The other candlestick pattern you can see is tweezer top and tweezer bottom. Tweezer top and tweezer bottom all mostly happens around at the top and at the bottom of the trend of the price movements, and it happens around the support and resistance zone, and it's better when the second candle, this candle I mean, it's better to be bigger than its previous candle. But when this candle is the body of the second candle is smaller than its first candle, its previous candle, it doesn't mean that this signal is not valuable. You need to pay attention to these signals, even if it was the second candle was bigger than its previous candle, or it was smaller than its previous candle. Let's see what has happened in these candles and why we say these candles are bullish or bearish, and they are bullish signals or bearish signals. Imagine we have a downward trend here. Okay, we have a downward trend here, and this candle opens at this point. We have some upward movement, and after that we have a downward movement until here. And candle closes at this point. After that, the next candle in the next session, the price only has an upward trend and an upward movement. We have also a shadow here, and the price starts from here, increase, increase, increase to here, and after that start a small decrease movement, and this shows us at when we have this signal around a support line, like here, like this line, uh, or when we have this around a support zone, it shows us we are going to have an upward movement. Okay, in the future, this candlestick signal starts uh, begins an upward trend. Okay, we have same thing in this candlestick pattern. We have an upward movement. At the end of this upward movement, at the end of this upward movement, price at the candles of the end of the upward movement, and the last candle, the last bullish candle, opens price in that candle. Price opens at this point, increase decreases to here, and after that start a upward movement, and the price increases to here. Okay, after this after the close of this candle, the next candle, when it opens, starts a downward movement, decreases the price decreases to here, and after that starts a little upward movement and makes this shadow. Okay, and this shows us the buyers, I'm sorry, the sellers have started to control the market. Okay, and this is a good candlestick bearish signal. Okay, let's see the example of this candlestick signal. We have the top and bottom at this zone. Okay, we have an upward trend here. You can see the trend is upward. We have a bearish signal here, and it has shown us the price is going to have a downward movement, and you can see this downward, you can see this confirmation signal can be visible. And after that, we have had a downward movement until here. But you'd better not to get sell position in this area, because you'd better not to get the position in the opposite side of the trend. Okay, until you are beginner. I will give you some. I will give you 20 seconds. I think it's enough. Give you 20 seconds to find other signals that are around good areas to get buy position or sell position or anything you think it's better. Okay, let's talk about signals. We have a support line here. At this point, I think we haven't any clear signal, clear candlestick signal. At this point, we have something like hammer pattern here and here, and we also have a spinning pattern here. Okay, we have something like a piercing pattern here, but here we have a harami, a clear harami candlestick pattern, and you can get buy position in this area. Let's go forward. I think the last candlestick pattern that we are going to talk about is the 3 white soldiers and 3 black crowds. Okay. When you see after a down these 3 green candlestick patterns are called 3 white soldiers. These 3 candlestick patterns are 3 black crowds. When we have a downward trend, I'm describing the 3 white soldiers, the left 3 candlestick patterns. When we have a downward trend, after the downward trend, we have one solid bar or one bullish candle, and after that, you can see the next candle closes at the close price of the second candle is higher than the close price of its previous candle. And also in the third candle we have same situation. The third candle's close price is higher than its previous, the second candle. Okay, so after a downward trend, these 3 candles shows us an upward movement is beginning. Okay, it doesn't need that all of these 3 candles be green. Okay, it's better to be green, 3 of them, but it's not very necessary. This shows us the prices have started an upward movement after a downward trend. We have same thing in the 3 black crowds pattern, candlestick pattern. When we have an upward trend and we reach to a resistance area, after that we see 3 candlestick, 3 green candlestick pattern, which in each one of them close price is lower than its previous candle. It shows that a downward trend is beginning. Okay, it's important for you to find out an upward trend or a downward trend is beginning. Let's see the example, an example of this candle. this support line. We are around this support line, and in this area you can see at the end of a downward trend we have three candles and we have some gap here that shows us the price upward movement is very strong. Okay, and it shows us the an upward movement, a powerful, a strong upward movement, a strong bullish movement has been started. So you can understand that the prices are going to have an upward trend. Also, we have some other candlestick patterns that I will talk about them. We have around the support line, we have this piercing pattern. We have a hanging man pattern, which is around the support line of the downward trend. Okay, we have this hanging man pattern. We have this spinning bar pattern, spinning bar candle. We have another, I don't know, it's between hanging man and long leg doji pattern here. We have a doji here. We have a harami, something like harami here. And these was where some patterns that I have found. This shape, this image has more candlestick patterns that you can find some of them. For example, here we have a harami pattern. Another name of harami pattern is inside bar. Okay, we have reached arrived at key points that you need to know to become an expert trader. Okay, to become a successful trader. The first key point is that the prices movement at the beginning of the session trading day, I mean, not that session, shows us the rumors and news and what has happened in the previous day, in the time that market was closed and no one could trade. When a market opens, when traders can start putting their orders or stop their orders, when they listen an important news at the beginning of the market, next day's market, they will, for example, they stop their buying position or selling position, or they may get buy position or sell position, and this shows this behavior of the traders shows us what is going on that trading day. Okay, it's very important what has happened at the beginning of the market. The other thing you need to know is that in some cases traders Uh, uh, in some cases, traders wait to uh, wait until the end of the market, and they wait until the close price verify the opening price of the market. They want to find out how much powerful is the impact of some news and some economic happenings. Okay, you know what I mean. They want to know. It is it some news will have a small will make a small movement in indicators and in indexes and in price chart patterns, or that news make big movements in the charts. They make a big increase and decrease of the price, or they make very small movements. Some traders wait to find out how much powerful is the that news in the market, how much it changes the market. Okay. Okay. We have some key points you need to know to trade. You should. I have told you for several times that you should take position in the direction of the trend. You should not get position in opposite direction of the trend until you are a beginner. When you have become an expert trader, you can do it. But as a beginner, don't get position, buying position or selling position against the price trend, major trend. It's very important. For example, when we have an upward trend, only get buy position, or when we have a downward trend, you are only allowed to get a downward sell position. Okay. Evaluate power of the signals by the evaluating power of candlestick pattern, and I've told you in each one of the candlestick patterns. For example, engulfing patterns, I've told you they are very strong patterns, or piercing are strong patterns, but spinning patterns are not very strong. Harami is not very strong. Evaluate power of a signal by evaluating the power of the support and resistance zone that we have described about it in our first session, and evaluating the power of candlestick signal, and also put your entry point and stop loss. Stop loss is very important to stop the to prevent big money losses. Okay, to prevent big big money losses. To prevent um, financial damages. Okay, start now. Okay, uh, for your practice, uh, for find at least uh, 10 signals in the charts. Uh, uh, bring your trading platform. I've introduced you trading view in the previous session, and for each one of the candlestick patterns that I have told you, find for each one of the candlestick patterns I have told you, find at least 10 valuable signals that you can trade with. Okay, that you can get position with it. I will do it. I will find some candlestick signals for you to be familiar how to do this. To how to do to perform this. For example, let me draw the support and resistance line. Okay, you can see here we have a hammer pattern, and this pattern has made this upward trend for us. Okay, we have another hammer pattern here, or hanging man. It looks like hanging man. It's a buying signal, and we have an upward trend. So the trend is upward, and I only get buying signal. We have we have another. Here we also have another. We have a dragonfly. Here we have a hammer or hanging man pattern. Here we have a inside bar pattern, which is good to get buy position. It's around support zone. Here we have spinning pattern, For each one of these candlestick patterns, for example, tweezer top, tweezer bottom, 5 at least 10 candlestick signals. I have uh, shown you how to do this, uh, which uh, uh, which you can get buy position or sell position, and which are around a support or resistance line that is true to get buy position. Okay, I mean, when you get buy position, the trend should be upward trend. When you get sell position, the trend should be downward trend. Okay, uh, that's it. Find this to practice more, to become more capable to find the candlestick signals and to find out how to trade. It's very important and useful and practical for a trader to be able to find out the signals. It's very important for your future to become an expert trader. Uh, okay, okay, my friends. Let's continue with indicators. In fact, in classical technical analysis, uh, indicators uh, are important, and they are important tools to take profit from the market. And you should pay attention to this key point, that indicators are useful and they're practical, especially in markets that have a specific trend. So you'd better not to use them in the markets that have no trend, like forex market. But if you are a trader of the forex market, or in some cases some assets in cryptocurrency market, you'd better to know about indicators, and you should be familiar with indicators, uh, because I think it's necessary for you to be familiar with indicators while you want to uh, 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 learn price action, in fact. Uh, so it's necessary for almost all of the traders that it's necessary for almost all of the traders to know about indicators and be familiar with them. Uh, yes, this was um, some uh, some important things, I think, that you need to know. Uh, some descriptions, in fact, uh, or some comments about indicators in different markets. Okay, what are indicators? Indicators are mathematical functions that draw some shapes or lines in the charts based on specific formulation that they have. And different indicators have different behavior, and because they have different formulations. We have thousands of indicators. I don't know how many indicators we have, because you can, if you become a programmer, you will become able to write the codes of these indicators. I think in fact, we have thousands of indicators, but some of these indicators are more useful, and you should know about these indicators. Uh, this was some descriptions and some details about indicators that you have need to know. We have two type of classification of indicators. In fact, you need to know the classification of indicators to find out the attributes of each indicator, to find out which indicator is better for each situation, which indicator is better. It's important to know about them. We have two type of indicators according to the time that they give us signal, according to the time that they say get buy position or get sell position. Uh, uh, some indicators are leading indicators, and they give a signal with price movement. In fact, they give us more signals, and their signals, the risk of their signals is a little higher. And also, we have some indicators that are called lagging indicators. They give us signal with the price chart, mm, with a delay to price chart. They give us less signal. Uh, in most cases, when you use the signal of these indicators, you lose some part of the upward or downward trend, and they have good performance in the markets that have specific trend. Uh, some of these indicators are MACD, moving average, and RSI. Some leading indicators are stochastic and unbalanced volume. In the future sessions and future parts of our tutorial, we will talk about volume indicators and unbalanced volume. OBV indicator, in fact, is one of the volume indicators that I think we will talk about in the future of our tutorial. In fact, indicators indicate the changes of the trend. Some indicators give a signal before or at the same time or after the trend is going to change. For example, we have a downward trend. The trend that we can see now in the chart is downward trend, and you can get some signals before an upward trend, uh, starts. For example, divergence signals are signals that we get that tell us the trend is going to change. For example, we have a downward trend. We will after that we are still in a downward trend. We see a divergence, and after that you can see the trend becomes and changes to upward trend. Okay, so the indicators alert us about this important thing, that the trend is going to be changed. Another usage of indicators is that they show us the right entry price and the direction of the futures trend, or the trend that we have right now. The most important usage of indicators, according to my opinion, is that indicators can verify our prediction. We can check our prediction with indicators. We can, in fact, we can get a validation, confirmation about our prediction. This is three major usage. These was three major usages of indicators. We have another classification. We have one classification of indicators that says we have two types of indicators. Some of them are lagging indicators and some of them are leading indicators. We have another classification of indicators that is important for you to know, which in that classification we have trend indicators, which shows us, which tells us information about trends, and they are good indicators to analyze the trend or the future trend. Okay, like moving average is a trend indicator. This indicator that you can see here is a type of trend indicator. Is another type of indicators are oscillators. The difference between indicators and oscillators is that you can see moving average indicator lines appear here on the chart. Okay, but for example, this indicator, you can see this indicator shows its graphic lines in a separate rectangle in another part, in another chart, I mean. On the charts, okay, it shows in the below of our chart. We call these types of indicators oscillators. This is the name of the difference between indicators and oscillators. Uh, Another type of indicators are volume indicators that we will talk about these types of indicators in future parts of our tutorial. And we have Bill-Williams indicators that I think I will talk about in the future. Volume indicators are indicators that help us to find out the volume of the trades, and they are they are not the volume indicators, in fact, are not good indicators for in fact currency markets. Okay, uh, but I think you'd better to know about these types of indicators. Your knowledge should be at the good level. Your Yeah, you should become your knowledge should be at high level uh, uh, in field of classic technical analysis. If you would like to become a successful trader. Uh, at this time, I will recommend you to if yeah, I will recommend you if you have not seen our previous session 1, stop this video and return to our first session and watch that, because you need that information that we have uh, presented to you, and they are necessary in this session and in the future sessions. Okay guys, let's talk about our first indicator, which is called moving average indicator. Are you ready? Okay, let's go. Uh, this indicator is a trend indicator, and it's a lagging indicator. That you can see its image. We have these are charts, price candlestick charts, and this purple line, and this yellow line, and this red line are lines of different different period of times of this indicator. Okay, this indicator in fact is a trending indicator, and you'd better not to use this indicator in the range markets. It gives you false signals and it may cause you lose money. Okay, so be care about this subject. Let's see how this indicator calculate. How does this indicator? How is this indicator calculated? Let's see. I will show you with a text document. Okay. For example, at the first day of, for example, we want to calculate this indicator for today. Okay, 3 days ago, for example, 4 days ago, price has been closed on price of a stock, a specific stock has been closed in $1. Okay. After that, 3 days ago, that stock, that the price of that stock, that asset, has been closed in $2. The close price was $2. 2 days ago, the close price was still $2. Okay. Yesterday, I will write 1 day ago. The price has been closed in $3. Okay. The moving average of the average price of 4 days ago, the average close price of 4 days ago was 1,358. 8 divided to 4 is $2. Okay. The average price of these days is $2. Okay. Now imagine that this indicator for today, the line of this indicator is on $2. Okay. For example, imagine that today close price becomes for example $12. We should to calculate the average, the moving average of 4 years ago. We should do this. 12 plus 3 plus 2 plus 2. Okay, so it is 17. To calculate the moving average of 4 days ago, we should divide 17 to 4, which becomes, let me calculate it, 4.25. 4.25. So this indicator for today, the moving average of 4 days ago for today becomes 4.25. Okay. This indicator calculates with this method. Okay. So it shows us the average price of, for example, in our example, it shows us the average price of 4 days ago. It shows us, in fact, it shows us the average price of the specific period, that period of time that we give to this indicator, and it calculates the that number and shows that number on the chart. You can see these lines are moving average lines. Okay, uh, this line, in fact, is uh, one of the practical factors, one of the practical tools that you can use to take profit from the market. Okay. For example, here you can see when the price touches this line, this moving average line, after that, the price starts an upward trend, a big upward trend, that you could take profit from it. Or at this point, you can see when the price has crossed this indicator line, the prices has been increased, and the prices have an upward trend. Okay, so you can use this indicator to take money. An important factor you need to pay attention to is that if you are still a beginner trader, only use this indicator to get positions in the direction of the trend. If the trend is upward trend, only get position, get buy position. Or if the trend is a downward trend, only get sell position with these indicators. Okay. The most important factor in this indicator, the most important factor that changes the shape of this indicator is the period of time that we use this indicator. For example, this purple line is the indicator line while we use a short period of time. For example, 8 days. When we use 8 days or 9 days period of time, this indicator line appears. When we use, for example, 20 days or 14 days, this yellow line appears. And when we use a period of 21 days, 21 period of time, 21 days period of time, you can see this red line appears. So it's very important to find out the best period of time for that time frame, that you are using, and it's very important for you to take profits. You'd better to check different time periods and choose the most profitable and choose the best time frame that you can use to the most practical, in fact, time frame. For example, in this image that you can see in the right side of our slides, you can see we have 3 time frames, and if you were and we have different time periods, and if you are a long-term trader, if you like me, you'd better to use this red line. It's more practical for you. And yeah, I personally Um, I personally, I am a long-term trader, in fact. But if you are, for example, you wanna get more signals, you can use this yellow line, which has, I think it is 14 days period of time, um, day period, in fact, time period, um, to start trading and getting position. Uh, yeah, you can use this strategy. Uh, we have three types of in three types of indicate moving average indicators. Uh, Simple moving average indicators is an indicator that gives same weight to close price of all days. Okay, uh, exponential moving average gives more weight to newer data and weighted moving average is a type of moving average that gives more weight to new data and it gives less weight to the older data. Data. Uh, this is the difference between uh, these three types of indicators. When you check these indicators in the, for example, MetaTrader platform, let's check it. Sorry, in TradingView, we have another trading platform which is called MetaTrader. Uh, I changed the language for you. Uh, uh, let's see the difference of these three types of moving average indicator. I know that these indicators have no difference in this uh, platform, but I want you to know too. Moving average. You can type moving average of MA, or you can type moving uh, average. Oh, moving average. What are these types of moving average? These are unfamiliar for me. Uh, let's check this one. Oh, what is that? Moving. divergence, but this is MACD indicator. This indicator moving average rebound is not familiar for me. I haven't seen that. So let's check another platform. We will use MetaTrader. Okay, this is MetaTrader platform. You may need to use this platform in the future. Some of you that are watching this tutorial may be familiar with this platform. I will talk a little about this platform. We have different symbols here. When you, for example, want to see the chart of this indicator, this pattern, this symbol, you will press this, okay, and it shows it this symbol for you. I close this platform, that symbol, and I will show you a chart with these three types of indicators. This blue indicator is weighted moving average, and its period of time is 55 days. Okay, it's 55 hours. Our time frame is hourly, and we have 55. Okay, so you can see the weighted moving average mostly is the nearest line, is more near the price chart, because it gives more weight to newer data, and it gives less weight to old data. Okay, and this is exponential moving average, the yellow line is exponential moving average, and this is also in most cases more near the chart line than simple moving average. Okay, and in most cases, they are near each other. All of these indicators have same period of time. They are near each other, and the other thing that you'd better to know is that the weighted moving average mostly gives us signal faster. Okay, but in some cases it gives us more invalid signals. Okay, so you should better know these items and these factors and these facts about these three types of moving average indicators. Okay, and this was some details that you have needed to know about moving average indicator, about difference of these three types of moving average. Okay, let's go to our slides and let's close this page. Uh, and this was the difference of these three types of indicators. In the right side of our slide, we have a chart that I think it will be necessary for you to access this chart, and I think you'd better to take a picture of this chart or write it somewhere. Write the details of this chart somewhere, or take a screenshot. I don't know what they want to do, but this table is very useful in the future for you. What do we have in this table? We have some time frames that you may use to trade in the future. For example, 15 means 15 minutes. When you see charts with time frame of 15 minutes, each candle shows the information about 15 minutes. We have H1, which means 1 hour for each candle. H4 means 4 hours for each candle. D1, which means each candle shows the details and information of 1 day. W1, which means that each candle shows us information of 1 week. Okay, let's see what this table tells us. This table tells us if you want to use 15 minutes M15 time frame, you'd better, if you want to use moving average indicator, you can use these periods of times. Okay. For example, when you wanna trade in 1 hour H1 time frame, in fact, you can use these period of times, 8 hours ago, moving average of 8 hours ago, 34 days, 4 hours ago, 55 hours ago, 89 hours ago, or 144 hours ago. If you want to use a 4-hour time frame, these periods are more useful. 1 day time frame, these periods are useful, and 1 week time frame is these periods of this indicator are more useful. This was everything that you have need to know about periods of the times that you can use for this indicator. In most cases, I see that traders use, for example, 9 days period, okay, or 20 or 21 days, or for example, here I have wrote 13 days, they use 12 days. These small difference, I think, is not very important. Okay, there is no big difference between moving average period of time from 12 days period of time and 13 days period of time. Okay, so you can use this table to uh, use in your moving average indicator. Okay, guys, let's continue. Uh, let's see how should we trade with moving average. When the prices cross the moving average line upward, for example, in a specific time, the chart's price is under the moving average line, and when it crosses the moving average line and becomes in the top of this indicator, uh, when uh, when you can see the first candle closes on the top of this line, and second candle, uh, the close of the second candle is also in the top of this line, you can find out the price chart is crossing the moving average line, and this is a buying signal. So you can start getting buy position. Okay, and when this indicator the prices uh, and after this cross, when you have got buy position, in most cases the price chart stays at the top of the in the upper side of the moving average uh, indicator line. Uh, for example, 2 days later, 3 days later, 5 days later, the price chart crosses the moving average and becomes below of the moving average indicator line. The first candle, when it touches and closes under the moving average line, you should be prepared to sell your asset or get sell position. Uh, and when the second candle closes uh, below the moving average line, it shows us, it gives us, in fact, it gives us selling signal. Okay, uh, and this is the signal that moving average indicator gives us. Uh, we have told you, I have told you that period of time that we choose for our indicator is a important factor in this indicator. In the uh, in signals that this indicator gives us. When you use a long-term period of time, this indicator gives us less signals, but the signals that this indicator gives us in a long period of time is more trustable, and these signals are more valuable. And when we use a short period of time, for example, a moving average of 8 days, you can see in the charts that this moving average gives us more signal, and more signals become invalid. more signals may cause losing money if you get position, or if you get buy position or sell position with that signals. This is important to find best period of time to trade. Okay. Um, yeah, this is very important. Another type of trading with this type of indicator is paying attention to sequence of different period of time and different period of times that uh, that we can use this indicator. For example, um, for example, you have uh, a moving average on your chart. When you have a moving average of, for example, 13 days, okay, 13 days and 8 days, okay. Uh, when the indicator that shows you the indicator line that shows you period of time, in fact, moving average of 8 weeks ago, when it crosses the indicator that indicates 13 weeks ago, it gives us, when the faster indicator crosses the slower indicator, it shows us it gives us buying or selling signal. Okay, when faster indicator crosses the lower indicator and becomes at the top or at the upper side of the slower indicator or longer term indicator, it shows us that you should get buy position. And when faster indicator crosses the slower indicator, this indicator gives us sell signal. Okay, for example, in this chart, we have, for example, this indicator which shows us the which is a long-term indicator. And this yellow line shows us a shorter term indicator. When these, for example, at this point, when shorter period of time indicator crosses the longer term indicator, it gives us buying signal, and you can get buy position here. And when this indicator crosses this line crosses this slower line, it gives us sell signal. For example, in this example that I am showing you, here is buying price and here is selling price. Once more, you should pay attention to this key point, that you should not get position in opposite direction of price chart movement. Okay, for example, here we have an upward trend. The prices are increasing, they are going up, upper and upper and up. So in this chart, you should not get sell position, because the risk of losing your money becomes higher. Now, when you have become more experienced, you can get sell position in these types of markets. Okay, guys, I have talked about sequence of different period of times in this indicator. I would like to show you uh, the performance of this indicator in the trading view platform, but I think it's impossible for me. Let me check another once more. Mm, okay. Trading view. Okay. Um, let's see other company. Uh, chart first. Price chart. Okay. Let me check once more. Moving. Okay. That is all moving average. Okay, it looks like normal moving average, all moving average. Let's change the uh, settings of this indicator. Uh, uh, oh, that's here. Uh, I think 21 days is good period of time. No, that's not good. Uh, Let me check another. Daily 55 days. Okay. Oh, that's not bad. Let me add another indicator. Moving average of uh, you can use this indicator. What's that? Hmm, simple moving average. Uh, no, we can't use simple moving average, so we use again uh, whole moving average. I would like you guys not to have this problem with your trading platform. Uh, we change this to which period of time we were? Uh, 90 days. 90 days. Okay. we will use smaller chart. So let's see. Uh, we have a support and resistance line here, which is very important according to my personal strategy. And for example, here we have buying signal in moving average of this is the moving average of, I think it was 55 days. Yes. I am not able to, I'm not good at German. So we use this trend we have here, a downward trend. So in downward trends, the resistance line is more trustable and more valuable, and we draw the resistance line. I have told this to you in our first technical analysis part, and you should know this key point. For example, here we have a selling signal, and we have a confirmation of selling signal, for example. Or also here we have another selling signal when this, let me change the color. It is hard for me to understand which one is longer term. I will this is 90 days. I will change it to black. Okay. Okay. When faster moving average crosses the slower moving average and becomes in the top, it gives us buying signal. But we have a downward trend, so we do not get buy position in this, for example, in this chart and here. We will wait until this indicator give us a buying signal. We will wait here until here. At this point, this indicator tells me, okay, Mehdi, it's time to get buy and sell position. We have a downward trend. The trend is downward. And at this point, you can get a sell position here. Okay, here you can get sell position. And when I get sell position, here this indicator from here, from this price, this indicator has told me to get buy position, and in this price, it gives me sell position. Okay. Yes, that's it. Let's see when it gives us another signal. Uh, we, and at these times when a support or a resistance line breaks, you'd better to wait to find out the trend of the future of the market. Okay, until you have not become an experienced trader, do not try to get, for example, buy position or sell position in these areas. You'd better not to get buy position and sell position in this area. So you will wait to see what is going on. It looks like the major trend is downward. Okay, so now you can get buy or sell position. Okay, I will change a little our support and resistance line, and I will wait. Uh, I will wait to until getting another signal from my these two indicators. Here I have got another signal. We are around resistance line. The trend, the major trend is downward, and it's good time for me to get sell position. It's around also it's around my resistance line. Okay, so it's good time to get sell position and wait until the indicator gives us take profit position, taking profit or stop my position. Okay, here I will get buy position, and let me draw something here. At this price I will get buy position. Let's see what is going on. Oh no, and here indicator gives us sell position and stop position, in fact, in this indicator. You could put your stop loss in this area a little higher than your resistance line, and here you have got stopping signal stop signal, sell signal, in fact. Let's see what's going on in future. At this time, also the future is a little unclear. For example, here the trend was upward trend, but until here we have a downward trend. I have lost one of my positions, and I have lost some money. So at this moment, I will wait to see what's going on in the future. I want to see we have an upward trend or a downward trend. Let's see. I think we are going to have an upward trend. Until here we don't have the future of the our chart, but it looks like from indicatory point of view, from technical analysis point of view, the future of this trend, I think, is going to be going to have an upward trend. But when I at this moment, when I use my fundamental skill and my own experience of trading, at this moment I am recording this video. Uh, the uh, the informatic industry have some problems, in fact, uh, and there we have some factors that uh, this industry is going to have a resection. So the price of the stocks of the companies that are working in this industry may lose their price. The price of these uh, companies may reduce its price. The prices may be reduced. So it's hard to uh, it's hard to say that the trend of the future of these industries are upward trend. I think it is only a short-term upward trend movement, and after that we will see that uh, these uh, these price charts will have a downward movement. Um in fact, everything is unclear right now. We should see what is going on. I personally, at this moment, don't invest on companies that are active in the technology fields and informatic um, industries. Okay. Okay. Let's continue our. Let's talk about other indicators that we have. Uh, the next indicator that we are going to talk about is moving average convergence divergence. Uh, this indicator has two lines that both of them are exponential moving average that we have talked about them in the moving averages part. This is exponential moving average of a shorter period of time, and it is a faster moving average, and it gives us fast signals faster. And this is a moving average of a longer term period of time. The key point that is very important uh, when you compare these two indicators is that you can see uh, in MACD indicator or MACD indicator or moving average convergence divergence indicator, you can see this indicator has uh, overbought and oversold zone. Okay, but you cannot get overbought and oversold zone in the indicators like moving average. Okay, This is one of the major benefits of using this indicator compared to moving average indicator. Uh, the numbers that are used in this indicator are 9, 12, and 26, which are moving averages that use different parts. Uh, let's talk about different parts of this indicator. I have told you we have a faster indicator, we have a slower indicator. Okay. The faster indicator is called MACD line. Uh, the slower indicator is called signal line. In most indicators, the slower line is called signal line. We have some part here, okay, this green part and this red part, okay. This green part, when the color becomes green, when the faster indicator is on the top of the in upper side of the slower indicator, MACD line is upper than slower indicator. The color of this part it becomes green. When this faster line, MACD line, becomes uh, under the slower line, uh, this causes the color of this part becomes red. Okay, uh, this is the information that color gives you. And what is this? Why at this point these bars, these vertical bars become bigger? These vertical bars become bigger when these vertical bars, the length of these vertical bars is related to length of the distance is related to distance between faster line and slower line. Okay, so it shows us at this point we have the most this distance between the faster line and the slower line. And for example, here also we have a big distance between these two. Yeah, that's at these 2 points we have most distance between these two lines. Another thing that you need to know is we call these bars, these green and red parts, we call these histogram. Okay, and we have a line here that is at the center of a histogram line, which is called zero line. Okay, yes, that's it. Everything about now you know everything about parts of this indicator. Let's talk more about the details of this indicator. When uh, the distance between these two lines becomes the most distance, for example, at this point, at this area, we are in the overbought zone. Also, when the distance between these two lines and zero line becomes most, we have most distance. For example, here we are also in overbought zone, or when the distance is a lot and the lines are below the zero line. These slow line and fast line are below the zero line. uh, we are at the oversold zone. Okay, and this was overbought. How we find out overbought and oversold zone according to distance between these two lines, which is shown by histogram part, or where the when the distance between these two lines, fast line and slow lines, are a lot with zero. This was information that you have need to know about these indicators. Uh, let's continue. Uh, the best time to get buy position in this indicator is the time that uh, the when the best time to get buy position is when we have the most distance between faster line and slow line and zero line. Okay, when the distance is a lot and these two lines are below the zero line, it shows us we are in the oversold zone and we have got buying signal. Okay, this is the most important difference between this indicator and moving average indicator. Uh, it gives us signals, uh, and it shows us we are in overbought zone or we are in oversold zone. It is not limited to give us the cross between faster moving average and slower moving average. The ideal, I have told you, the ideal time to get buy position is here. For example, it is around here. Okay, and it gives us a selling signal here. Okay, once more it gives us buying signal at this point, and it gives us selling signal around here. Okay, yeah, so you can see this indicator gives us if you use this indicator in the direction of the trend, you can get good signals from this indicator. For example, in this point, this indicator gives us buying signal, and here, around here, it gives us selling signal. This was some details about MACD indicator. This indicator is also an indicator that has good performance in the markets that have trends. That have a recognizable trend, that have clear trends are easy to find out. It's easy to find out we have upward trend or downward trend. Uh, let me check. The other thing that you need to pay attention, that I have forgot to tell about you, is the intensity of the cross between faster line and slower line shows us the power of that signal. For example, uh, here, here, uh, we have here the distance between these two lines was uh, a lot, and also the distance at this point between these two lines are a little high, a little the distance is big. Okay, we have a lot of distance here, and it shows us the power of downward trend is a little high. Okay, uh, yeah, this is an important point that you'd better to know. For example, uh, here we have had the cross intensity is not a lot, but because we are near the support line, uh, the buyers have pushed the price upper and upper. Okay, the reason that these prices have a sharp movement, a sharp upward trend at this at here, it is the reason is uh, the support line. Okay, the support line has pushed the price up. Let's continue. Okay, we have I have told you almost everything you need to know about this indicator. Let me check. Let me check these details. I wanna. Uh, uh, okay. I have told you about everything that I have told you almost everything that I have made ready to tell. But another thing that you need to know, we will talk about divergences, which are very important, and because of their importance, we will talk about them in our future session, our, I think, third session, third part of our tutorial. But a thing that I think it's better for you to know is that this indicator gives us a moving average convergence divergence. Gives us lots of divergence signal. Okay, and in most cases, you'd better to ignore these signals because lots of them become incorrect, and you'd better not to use divergences of MACD indicator. Uh, it was a important uh, key point. Let's check that. Can we can I show this indicator in trading view for you? I don't wanna log into trading view. It has caused some problem for me. Let's check. Moving average convergence divergence. In some platforms that you may use, this indicator is called MACD. In some platforms and some softwares that you may use, this indicator is called moving average convergence divergence. Then its name is not very important, but you may have some problems if you don't know about the name of this indicator. Let's see. I will go to the past. I think now is good. Okay. Let's see what we have. Here, this indicator gave us sell signal, but the trend is upward, so we do not get buy signal. And here, this indicator gave us buying signal, but also here we better not to get buy signal because we are not in oversold zone. We wait until reach an oversold zone. This is ideal situation that we get sell position. Let's go forward and see when we get buying signal. Here I think we have got a buying signal. We are almost around a support line. We are near a support zone, and this indicator gives us buying signal, and we are also in oversold zone. We get buying signal. You can see here we have a Harami pattern that we have talked about it before. Let's see what's going on. We have also a confirmation signal for our Harami pattern. We will get buy position here, around here, and let's see what's going on in the future. Let's go. Wow. And here we get sell signal. Okay. If you remember what we have told you in candlestick signals analysis, in the part that we have described about candlesticks, at this moment you can see the length of the body of these candles is very small. We are also near a resistance zone. Here we have a resistance zone. So it's a good time to sell our assets. And I personally prefer to sell. Yeah, I prefer to sell. Let's see what's going on in the future. You can see the length of the candles are still uh, uh, the body of the candles are very short. The bodies are not big, and it shows us the uncertainty of the market. Here we have a long leg doji, which shows us some conflicts between buyers and sellers. Let's see what's going on. What will be happening? Yeah, the prices has decreased, and here we are also near a support line. But MACD didn't give us buying signal. Um, you can get buy position, but I personally don't recommend you to get buy position at this situation, because this is the distance between support line and this candle is a little high, and we are also near a resistance zone. Let's see what's going on in the future. Yes. We are now near the support line. Okay, we are near the support line. Let me check the power of our support line. Yeah, we are in around a good support line. Here we have had good reactions between this support line and prices. Let's see the candles, the shape of the candles. Hmm. Uh, okay. The prices have broke the uh, support line. At this situation, you'd better not to get buy position or sell position. At this point, we hadn't yet any candlestick uh, good pattern. We have a shooting star here, but uh, it hasn't any confirmation signal. So we wait until MACD give us a buying signal. Okay, here MACD gave us buying signal, and you can see the size of the body of the candles are very small, and it shows us uncertainty of the market. Uh, I think this point is good time to get buy position. Uh, I don't have any fundamental information about uh, Apple company shares and stocks. I only use my technical analysis knowledge. Okay, the prices has been decreased. We have got buying uh, position at this point. We hadn't yet any stop loss. I personally put my stop loss uh, around here, and in these situations, I stop my order. I stop my buying order. But let's see what's going on, because we have some signals, some reversal signals, some reversal candlestick signals, like this shooting star, or like this engulfing signal. So we will wait until here. I will wait until here, and at this price, uh, almost without any profit, uh, I stop my order and close my order. It looks like the prices are going to decrease more. Yeah, without any lose of money, I've closed my position, and after that, market started a downward movement. When I see these types of movements, when my support line at the first time was here, the price broke my support line at this area. After that, I have changed my support line to here. It has broken it once more. I changed to this. It broke it. It shows us uh, the beliefs, the facts of the market is going to be changed. So it's better for you if you are a beginner trader, or even if you are a experienced trader, not to get any buy or sell position. Uh, it's for you only. Um, let's see. Oh, the prices started an upward and a downward trend. Okay, I've told you you'd better not to get any buy or sell position. The prices after that have got a downward trend. Uh, these was some descriptions about MACD indicator. In fact, MACD is one of the indicators that is more practical, and I see um, some traders, lots of experienced traders use MACD, and I have told you everything that these experienced traders, every details that you need to know about MACD. I think you're not different uh, uh, in the aspect of your information. You're not different with experienced traders. Okay, with you're not a lot different with expert traders. Let's continue with our slides. We have another indicator which is called parabolic stop and reverse. In some cases, you may see parabolic SAR, capital SAR. This is also a trend indicator. And it's better to use this indicator in the markets that have specific trend. For example, you can see this parabolic SAR indicator, these points, these blue points, and we have an upward trend. Okay, the reason that this indicator has good performance in the on this chart is its trend. It can be upward trend or downward trend. The goal of using this indicator is to recognize the trend and recognize good entry points. Uh, for example, uh, mm, the thing that you need to pay attention is that while points are under the our price chart, for example, here, we have an upward trend. In fact, this indicator tells us with these points that we have an upward trend. And when in a downward trend, also, these points are on the top of each candle. Okay, and each one of these points have a role of support and resistance. When, for example, when uh, here, uh, when uh, here, here, when the candles touch this point, uh, indicator tells us the short-term trend is going to change, and also we can get this a buying signal. Okay, uh, for example, in this upward trend, you wanna get buy position in the middle of this trend. You can use support and resistance lines, and you can also use this indicator. For example, once this indicator told me at this point to get buy position, once more at this point it has get me buy position signal, and once more here, once more here, and once more here. Okay, uh, this is another usage of this indicator. You should pay attention to this key point, that this indicator is a good indicator in the markets that we have specific trend, we have recognizable trend. And please let me check that I have told you everything. I have told you everything, but I think the most important key point that you need to pay attention is this one. This is a trend indicator, and you'd better not to use this indicator in the markets that have no recognizable trend. Okay, let's see charts. Let's see this indicator on a chart. Let me check my internet connection. Uh, I think my internet connection had a technical problem. Uh, Let me check once more. Mm, okay, no problem. Uh, Check this indicator in your own platform. I have don't have I have a problem with my internet connection, and uh, uh, eh, it has become the problem has solved. Uh, let's check. Hmm. My internet connection has once more made a technical problem. I will talk about other indicators. You personally um, check this indicator in your trading platform and check these details that I have told you. Uh, مشكل, the problem has been solved. Let's see this indicator on the chart. Hmm, we cannot use this indicator, unfortunately. But let's see this indicator in another platform. Hmm, delete indicator, delete indicator, delete indicator, insert indicators, and parabolic SAR. Let's change its color to red. Okay, you can see at this area it's a good entry point. Here is also a good entry point. If you wanna get this trend, okay, you wanna use this trend to make money. This is the shape of this indicator. On the chart, I think it has not the lots of details to talk about. Uh, uh, I think there is nothing more to talk about to describe. So let's move to our slides. Let's check something. Okay. Let's move to our slides PowerPoint and talk about other indicators. Uh, yeah, this is RSI indicator. Also, RSI also is another favorite indicator between expert traders. Uh, this is this indicator. mm, when we have some upward movements and downward movements in the price chart, this indicator uh, considers ratio between upward trend and downward trend. And this indicator uh, has um, this indicator, in fact, has numbered between 0 and 100. Okay, and according to this ratio and the ratio of upward and downward trend gives a number between 0 and 100 to the prices, and it shows uh, and it shows this number in its indicator. Okay, uh, if the number was higher than 70, for example, if this line is line of 70 and this line is line of 30. If the indicator lines were in upper than 70, we are uh, in overbought zone, and if the prices were lower than 30 line, well, we are in oversold zone. Okay, and this is overbought and oversold zone. If you pay attention, this indicator, another attribute and another benefit and advantage of this indicator is that you can see uh, support lines and resistance lines, and the concept of support lines and resistance lines works in this indicator, and this is I think this is the main advantage of this indicator, and its certainty is the main advantage of this indicator. One of the other benefits that this indicator has, one of the uh, attributes that in this indicator has, is when you combine the signals of this indicator with stochastic indicator, it gives you best results of buying or selling. Uh, let's continue to talk about RSI. Uh, let's I think now you can see this uh, this word, okay, signal word. Uh, When this indicator gives us a buy signal, in different situations, this indicator gives us buying signal. When this indicator makes a double bottom below 30 line, for example, here we have something like double bottom, or here we have something like double bottom in this indicator. It gives us a buying signal. If the price made a double bottom pattern, the price chart made a double bottom pattern, uh, but indicator didn't show double bottom pattern. For example, here at this area, you can see the price made a double bottom pattern. Now is better. The price has made a double bottom pattern, but you cannot see this pattern in our indicator. This is also buying signal. I think you had better to take the screenshot of this slide also. I think you will need this the details I have wrote here in the future. Another time that we get a buying signal from this indicator, if the trend lines have been broke, this is broke in indicator chart. For example, we have let's increase the size of the slide. We have a resistance line here. We have a line here. Okay, that the price has touched it, and we have a downward trend in our trend indicator. At this point, this area, this line becomes broken. Okay, when this line becomes broken, this is a buying signal. Okay, and this is one of the buying signals. Another time when that we get buying signal when cross the indicator. When indicator crosses the 50 line, for example, here we have got a buying signal. When the indicator, if we wanna have safer trades with a lower risk, we can get buy position after the 50 line has been broken. Okay, so the 50 line level is a confirmation signal, is a time that confirms our signal. Okay, this indicator also can be used in the markets that have no trend. In that markets, we get buy position when the indicator crosses the 30 level line. Okay, and this was buying signals. These were buying signals of these indicators. Selling signals are opposite positions of this indicator. When we have a double top on this indicator, for example here, or when we have a double top in the price charts, both of them are uh, selling uh, signals. In both situations, indicator tells us to sell our assets. If the trend lines has been broken in indicator or in chart, for example, uh, here the trend line has been broken, and at this point this indicator tells us we are going to have a downward trend. Okay, crossing indicator line. Okay, crossing from when we the price chart, the indicator cuts the 70 line and also cuts the 50 line. We have confirmation. Here we have selling signal, and here we have confirmation of selling signal. So it's better for us to sell our assets or get sell position. In trendless markets, you can use a 70 line when you can get sell position when 70 line is crossed, for example here or here. Okay, this was details that you have need about RSI indicator. Now let me check that can I show you this indicator or not. It is called relative strength index. This purple line is indicator line. This is, I think, moving average in trading view. For example, this indicator here gives us buying signal at this level. It gives us buying signal. But the major trend is downward. So we will not get buying position. We wait until the prices give us sell position. For example, here we will get sell position here. We are almost around the resistance line, and after that the prices decrease. I think here is good time to sell our assets because I think the market is on normal. The price chart is a little on normal. I will sell here. I will sell my assets here. As you can see, the price chart has broke my resistance line. So at this area, I prefer not to get buy or sell position. Yeah. it's unsafe strategy to get buy position and sell position in this area. So I personally don't get buy or sell position. Yeah, the prices have been finished. Let's get back to our slides. I have told you almost everything about RSI indicator. Use your own platform, use on your own trading platform, and check the areas that are good to get buying position or selling position. Let's continue. Okay, this is better, I think. Yes. Let's continue with Bollinger Band. Bollinger Band is a good indicator that shows us what is the highest expectation and lowest expectation that most of the traders have from, for example, the highest price that traders think that the prices are going to be, and the lowest price that traders believe that prices are going to go is shown by an indicator which is called Bollinger Band. The most important usage of this indicator is to show us the expectation of the traders. This indicator gives us good entry order levels in the markets that have a recognizable trend. This indicator shows us good buying and selling orders, good buying and selling prices. For example, here we have a support line. We have also Bollinger Band, and when this Bollinger Band shows us the expectation of the traders are around here, and prices touches the lowest price that we can have. This is a good signal for us to find out in the future that this is the lowest price that we can buy, and in the future the prices are going to have an upward trend. Okay, this is the benefit of using this indicator. Let me check something. Okay, it's good tool to follow the trend. Also, I have introduced you parabolic stop and reverse indicator, parabolic SAR, which that indicator and also this indicator are both good indicators to find out the good entry points to follow a trend. Okay, it's also a good tool to check breakout. This indicator is good tool to check breakouts, and yeah. The period of time that is mostly used in this indicator is 20 days, and the common divergence that is used in this indicator is 2. But in some cases, traders use divergence of Sorry. Deviation of two. Sorry. Uh, most traders, in most cases, the deviation in this indicator is 2, but in some cases that traders want to find out the intensity of upward and downward movements, they use 2.5 deviation. Okay, let me check something. Using only this indicator, I mean if you use only this indicator to get sell position or buy position, is a little risky strategy because uh, this indicator, the focus of this indicator is to find out the expectation of the traders, and it mostly doesn't pay attention to other important factors. For example, it doesn't pay attention to support and resistance lines and fundamental factors. In fact, in technical analysis, we do not focus on fundamental factors, but the disadvantage of this indicator, in fact, is that this indicator doesn't pay any attention to other technical analysis items and factors. Let's continue. The prices in this indicator, prices move between overbought and oversold zone when you can see the price chart, the chart's price is attached to upper line. We are in the overbought zone, and for example here we are in the oversold zone. This is how we use this indicator and find out overbought and oversold zone. And also when the volatility and when the prices have sharp upward and downward movements, for example in here, the distance between these two lines becomes more, and when the prices don't have sharp movements like here, and candles are have small body and they're very short, these the upper band and upper line and lower line get closer. When the movements are very sharp, these upper line and lower line get the distance between these two lines becomes more and more. One important thing that you need to pay attention is that when the prices have sharp movements, we are almost near the end of end of the trend. And when, for example here, when the candles are very short and very small, we have When the candles are very short and small, uh, most of the traders are waiting for some important news. And after, and this causes the bands get closer to each other. And after this period of time will be passed, you can see a sharp movement we have. We have a sharp movement. Okay. Also, we have some movements here, and I don't know the future. What is going on the future? Uh, and this is one of the important things that this indicator shows us, and it's better for you to know this important factor. Mostly, uh, we use in most cases we use 20 days period of time in this indicator, but uh, when we wanna get short term position, buy position or sell position, in some cases some traders use 10 days. It has good performance, but I personally don't use 10 days period of time. I recommend also to you to use 20 days to get better results. Check both of these period of times in your uh, application, trading application and platform. Uh, I have talked about this last key point. When bands get together, a new trend starts, and when these bands, the distance between these bands becomes more, the trend is around its finish. Let me check. Can I show this indicator in trading view? Mm, I personally use trading view, which is which my broker gives me a version of TradingView. It's in this in the website of them. It's a little hard for me to work with it. Uh, let me Bollinger Band, two Bollinger Bands. I will show you uh, 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 some types of this Bollinger Band. This is the standard deviation. I will put it to 2.5, and length, I do not change the length of this indicator. You can see uh, the deviations, the price chart gets out of this this one, this indicator is with standard deviation of 2.5, and this one has standard deviation of 2. You can see there is no big difference between these two indicators, but the difference that we can see is uh, in the less times, in fewer times, price charts break the uh, mm, lower line or upper line in the indicator that has a standard deviation of 2. Okay, I will remove this. Let me make some changes to see something else. Uh, and someone small. You can see this indicator. Let me change its color. Uh, you can see the inner indicator gives us more signals, and the indicator with uh, 10 days period of time gives us more signals, but its signals are a little untrustable. Uh, for me personally, it's hardcore. It's hard to get uh, to put uh, buying order or selling order with this indicator, this red indicator. So I will remove it and I will go back. Uh, I draw support line. Let me check the trend upward or downward. The trend is something like upward trend. Yeah, it's upward trend. Uh, I draw this support line, and here we have good situation to get buy position. So we are near the support line, and the Bollinger Band tells us we are in overbought zone, and I personally think it's a good time to get buy position. I will get buy position at this point, and let's see what's going on in the future. Yeah, you can see I can make lots of money with this price movement, and here I can get selling signal. I personally, when this price chart movements starts, I may sell my asset here or here. I will sell my asset according to my trading strategy, and I will take this profit from here to here. You can also develop your personal strategy according to technical analysis. I personally, my first technical analysis, in fact, is not my first uh, point of view of getting buy position and sell position, but uh, when you are beginner, you can use techniques that you will have in technical analysis to get buy position and sell position. I have told you we can use this profit from 112 I have bought this asset, and 100 about 30 I have sold this asset about 15% or 20% I have got profit. Uh, okay, I have told you almost everything about Bollinger Band. Let me check that I haven't forgot anything to tell you. Some traders and in some books that you read, you can see that have written something that if price touch the upper band and after that cross the middle band, the price goal is the lower band. I think it's not a good strategy. But if you want to check this strategy uh, in the stocks market of your own uh, country or uh, in the chart asset that you would like to trade, uh, check this. Okay, check this. Perform a back testing and see how it works, how this strategy works, and if you want to use this strategy, uh, check it, and after that, if you have seen it is a good strategy, use this strategy. But I personally don't recommend you to use this strategy according to my personal experiences. Okay, I have told you almost all important things. The other indicator that we are going to talk about is commodity channel index, or in some platforms you may hear that this indicator is called CCI. This indicator is a good tool to show us the trend. It is an indicator that helps us to analyze the trend. Okay, when you can see in the image when the prices, when the lines of this indicator are upper than the zero line, the trend is mostly upward trend. Okay, and also this indicator gives us a buying signal when it moves from the negative zone or zero line. Here is zero line. This is the 100 line and positive 100 line, and this one is also negative 100 line. Uh, this indicator, when the indicator line from the negative zone comes up and reaches the 100 line and crosses 100 line to top, it gives us the signal that an upward trend is going to start. And also, when this indicator from the negative zone here is negative zone, crosses the zero line and comes down, 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 and crosses also and reaches the minus negative 100 line, it shows us a downward trend is going to start. For example, here it gives us that if indicator has told us we have a downward trend. You can see here we have a downward trend. Or here an indicator tells us we are going to have an upward trend. You can see this upward trend. Okay, this is the CCI indicator. Mostly, this indicator uses 20 days period of time, and yeah, another thing that you need to pay attention is that the name of this indicator, in fact, is Commodity Channel Index. But this indicator is not only for commodity markets, and you can use this indicator in all of the markets. And this is one of the, in fact, most favorite, one of the indicators that is most useful between traders. It is a favorite indicator between traders. Yes, I have told you almost everything about this indicator. Let's see, can we show this indicator for you in trading view? Yes, yeah, trading view has also commodity channel index indicator. At this point, I think you know how to trade. So I only analyze the signal that we can get from this indicator. You can see here we are 100 line, minus 100 line, and 0 line. Here we have got a signal that told us a downward trend is going to start, and a downward trend has been started. For example, we have a downward trend here, and here has been broken. Okay, so if at this point we have a selling signal according to information that we get from this indicator. And here we have TP or take profit signal. That's not bad. And also this is not good. You know that. Here we have buying signal. We have a signal that tells us an upward trend is going to start. So at this point, I will get buy position, and I lose my money according to isolated information that I can get from this indicator. This was a CCI indicator. I have told you almost everything that you need to know about this indicator. The next common indicator, the next favorite indicator is stochastic indicator. This indicator has two lines. Okay, the blue line is called also K line. Is moving average of 3 days ago. Okay, and also it is faster than this orange line. Okay, I have wrote here red line. Okay. When these both of these lines are upper than this indicator line, I think here is also called 100 minus 100 line. My brain has stopped working. When these two lines are upper than this line, we are in overbought zone. Here also we are in overbought zone. Here also we are in overbought zone. And when these two lines are lower than this line, we are in oversold zone. Okay. This indicator has been built according to a concept that tells us the close price tends to be higher and tends to be high in an upward trend. Okay, and mostly we use a stochastic indicator to predict the market of next week. It is one of the usages of this indicator. And daily stochastic, we use daily stochastic to get daily trades, to get short-term trades. And another thing you need to know is that combination of stochastic and RSI indicator gives you good signals and tells you that gives you signals that have good details about overbought and oversold zones. And this was I think this was in fact most, I think, according to my personal experience and knowledge, this was I think a good tutorial, detailed tutorial that you can use these informations and things that I have told you to make up your personal strategy. I mean, you at the moment you know almost everything. You need to know to start trading, but continue our tutorial in the future sessions. We are going to talk about informations that are very practical and useful for you to have good trades. Okay, so continue with our tutorial. Let me show you this indicator, stochastic indicator, and also RSI indicator. You can see in a stochastic we have overbought zone. I forgot to tell about how this stochastic gives you buy or sell signal. When in stochastic, when we are in overbought zone, sorry, I am a little tired. Sorry. When we are in overbought zone and faster line crosses the slower line. For example, here When the faster line crosses the slower line, it gives us a sell signal. And when we are in overbought, oversold zone and faster signal crosses also a slower line, it gives us a buy signal. Okay, here we get sell signal. Here we get buy signal. Uh, let's see. Here RSI has gave us buy signal. We are in overbought zone. Here the trend is downward, so it's not safe to get buy position. We wait until getting a sell position. Let's see. Here we can get sell position, but we are in the zone that is hard for us to predict the future. The resistance line has been broken, and it's better for us not to get buy or selling position. We should wait to see what's going on. Let's see. The market hasn't a specific trend because of the economic factors that we have at the moment. The reason is that. But this indicator, when you are watching this video, the combination of these two indicators may be a good and a useful trading strategy and system. Let's see. We have a downward trend. I haven't thought that recession make educational problem for me. Uh, okay, we have a little upward trend. Okay, it's better not to get position, but I think it's better because of the financial crisis that we are adapting with. But I will show you when both of these indicators give us buying or selling signal. For example, here RSI gives us buying and selling signal, and both of these indicators are near oversold zone. So these two indicators give us selling signal here. Okay, let's see what will happen after we get this signal. Okay, the market, the prices has been decreased, and yeah, a downward trend has been started, and when the price the price cuts this line, I will stop my order. Okay, I will stop my here. I will take profit. Okay. I don't know how much the price has been decreased. Yeah, I have got sell position in $80, and it's now $60. Um, yeah, it's now 60 USD dollars. So it is a good gain for me. And mm, yes, that's it. Uh, Practice on the charts with the things that I have told you. Uh, in the future, I may update our tutorial, our technical analysis tutorial, and I think we will become able in the future to talk more about, for example, signals and factors that you need to pay attention to get buy position and sell position. I hope you become successful in the markets, but now the market is a little challenging. I hope you to become successful. Have a nice day and tutorial, and bye bye.